quiet. Deven Choksey of KRChoksey Securities is joining in. Deven, hi, good morning. Thanks for joining us this morning. It's been interesting. Good numbers coming in from a lot of nifty heavyweights. So Bajaj Auto, for example, strong earnings in what has been a challenging environment. But the stock is up 20% this year. Do you think there's more upside left?
Yeah. Good morning, Sonia. Well, I think on the domestic front, the product mix has possibly contributed to these higher numbers in this particular quarter, as well as I think the second half of the financial year. Largely because of the three-wheeler, which continues to remain mainstay as far as I think the profits and profit margins are concerned, has contributed significantly well in the product mix, and that's possibly one of the reasons for which it has shown better performance on margin front as well. In fact, it is very happy to see that Bajaj Auto is returning back to its earlier days of close to 20% kind of EBITDA margin in this particular quarter numbers. Should it sustain? Definitely there is a case for company to probably remain at a higher level than what it used to remain in the previous years. The export front, as I see it, I think remains still challenging. Not, I think, enough amount of clarity coming out as far as the export is concerned, and so would be the fluctuations on the forex. I would like to believe that I think the fluctuations on forex front probably has stabilized, and whatever advantage they have gained so far could possibly continue in time to come. But that's going to be one challenge I think that one will have to look out for. Overall, I think the price, according to me, I think has moved up in the last 2-3 months' time, and probably I think it covers up most of the possible gains that the stock would otherwise give from such kind of results.
All right. Hi, Deven. Good morning. So you believe that most of the good news is possibly in the price. You know, my co-anchors and Mangalam as well were discussing about coffee. I don't know whether you're a coffee person, but Tata Consumer's numbers looked very, very good. The stock, though, has run up even there. What's your view on the stock from here on?
Yeah, Nigel, good morning. Well, on the beverage front and the food products front, both of them have registered significantly better performance. On the beverages front, particularly, I think with the stores getting higher amount of footfall, comparative figures definitely, I think, are reflecting relatively better performance in this particular period. But more importantly, the growth has been registered on the food side, and that is where probably I think one is looking at higher amount of possibility of continued growth and the margins thereafter. On the volume front as well as on the revenue front, the food product segment has contributed 8% on the volume front and 25% on the revenue front growth which has come up, which probably I think is a good sign as far as I think the company's outlook is concerned. In my viewpoint, I think still there is a lot to come as far as Tata Consumer is concerned. Not many strategies have been placed in this company's growth program, and I would like to see how this company, I think, registering further numbers on a sustainable basis. But overall, good set of numbers. A stock is worth looking at investment even at current levels.
Deven, good morning. You know, one name from yesterday was Crompton Consumer, which was down 12% after all of the management changes, etc. There was a conference call yesterday evening with analysts. I don't think that has added very much to the confidence. They've basically just said that, you know, this is not new. They were looking for a new MD CEO for some time, and that the new person who's coming on is basically he fits the bill. According to the management. And I don't know how much that will do for the stock, but what's your sense? Crompton Consumer still trades at about 27, 28 times F5 24 earnings.
Hi, Prashant. Good morning. Well, I think the valuation-wise, it is adequately priced. Generally, one has seen that whenever the management changes, I think the first task that they would undertake would be to clean up the previous mistakes, or for that matter, even the balance sheet cleanup, I think, would take place if at all there are any issues which are pending. If that is the case, then possibly, I think in subsequent quarters, you might see, I think, some kind of a, check coming on to this particular front of cleaning of the balance sheet and the numbers. We have not heard anything on that front, of course, I think, from the company at this point of time. But one would like to give them a chance. Maybe I think the new management would probably start producing better strategy going forward. So let's wait and see. As of now, the stock appears to be fully priced, and I think not much is, I think, probably talked about for immediate future gain as far as I think the valuation is concerned.
All right, Deven, we'll come back to you in just a few minutes. You know, for the timing, let's focus on a smaller company, Bharat Wire Ropes. They posted a solid set of numbers in quarter 4 earnings. The sales bounced up. The margins came in at multi-year highs. In fact, came in at close to around 28%. Mr. Mittal, ML Mittal, Managing Director at the company, joins us on the show. Hi, Mr. Mittal. Thanks so much for joining in. Well, we haven't spoken before, but these numbers looked quite good. So we want some crisp details. For the last year, your volumes were close to around 38,500 tons. So what is the outlook in terms of volume growth for this year? What do you end FY24 with? Point number one. And point number two, Mr. Mittal, your margins are looking spectacular, 28%. What is the sustainable margin we should be looking at from here on?
Good morning. See, the volume growth is mainly three factors. One is product mix. Second is volume growth. Third is realizations. So as compared to last year's, our realization increased almost by 30%. Volume growth increased by 13%. And product mix also we changed. We are going for the better product mix. That's why we are getting higher realizations. And I'm confident that this growth is sustainable in the coming years also.
Mr. Mittal, just to get back to the point, volumes, you're expecting it to grow by at least 13% for this year or more? From 38,000, does it go to around 44,000 for this year?
It's likely to be there, but depend upon the total productions. This is first month of operations, and we are confident. Yes, we are going to increase the production because some bottleneck in the plant capacity. We are going to add some balancing equipments that will give additional volumes also.
You have got enough capacity. What is the growth part? Should we assume 42,000 for this year?
It is likely to be better as compared to last year's. Okay. Look into the expansion plans, means a bottleneck in the systems and additional equipment we are putting to just capture the total capacity.
So we are working with around mid-teens growth for this year. 13% is what you did last year. You're looking to replicate that. So we'll work with that for now. What about margins? I asked you that as well. 28% margins is what you did. We got you're focusing on value-added products. So give us two numbers. Sustainable margins. Second is, since you mentioned VAP, how much does value-added products contribute as a percentage of your sales?
See, almost 25% production is the value-added products we are having right now, and which is going to increase up to 40%. So this margin is going to, better as compared to earlier years. That's why we are confident this year's company can sustain the top line as well bottom lines, and we are expecting the much better margin in coming years.
So margins of what, 28%? You can hold on to these levels?
Yes, definitely we can hold this margin. Look into our track record and existing order book positions and the margins, what we are expecting. Second thing, the steel prices also going down as compared to earlier years. So that also adding the margins. Operational efficiency improving in the current years. We are having many other options like energy cost in the controls. We are going for solar. Okay. Solar will give, and LNG price is also going down. We signed the 6 years. That will give the more benefit.
Or we'll have to track that because 28% appears a very high number, but you're confident about maintaining that because of the measures, so we'll hold on to that. Final couple of questions then. In the past quarter, you've increased the promoter holding has gone up by around 3.5%. It's closer to around 40%. Does the promoter intend to hike stake from here as well? If yes, to what levels? And though you're hiking stake, but 45% of your shares are pledged. Why is that?
See, 5% we taken preferential allotment at 125 rupees. Our shares are placed to the existing bankers as part of restructuring schemes. It is not placed to any third person against the loan or anything. So we not take any financial assistance from any third parties. This is a existing bankers has placed that will release once we pay the term loans.
Okay. And promoter, will it increase stake from here on from 40%?
Not likely immediately.
Okay. All right. Final question then. Last year you did revenues of 590 crores. What do you end this year with? Should we assume around 650 crores for the year, revenues?
Revenue is likely to increase in current year also. Because as I mentioned, we are going better, certain equipment we are adding, and definitely bottleneck in the systems, whatever production, we are getting current year, definitely will get better than in the coming years.
To what level, sir? From 590 crores, what can you do?
See, it's difficult to reply right now because of the, entire year is pending, but we are confident because we are adding the additional equipments regularly. So wherever there's a bottleneck in the systems or, utilization capacity, we are going to achieve the higher capacity in current year also.
Got it. All right. Thank you so much for joining in. That's Bharat Wire Ropes. By the way, it's had a stellar run. It's up almost 100%, I think doubled in the last 12 months, and the promoter holding has also risen to almost 40%. So keep an eye out on that stock, one of the big buzzers in the broader markets. But let's get back to tracking some of the large cues. So many cues to look at today. Deven Choksey is still with us. Deven, the other stock that we're watching is Maruti. Comes out with numbers, later in the afternoon. And this time around, there are so many positive triggers for Maruti. Of course, demand has picked up. Supply chain constraints have eased. At this price, how does the risk-reward look?
Yeah, I think on the face of it, the price probably, I think, has corrected. But at the same time, I think one wants to see the sustainability of the profit numbers. I'm not completely sure about, I think, how exactly the revenue growth definitely understood because of, I think, the volume increasing. But on the profit margin front, I think I'm having my own doubts. I think I would like to see a couple of quarters of sustainable profit margins coming in for the company. And possibly, I think the year 23-24 looks relatively more promising than it was before because most of the issues which were troubling the company have been sorted out by and large. And I think the demand scenario remains practically, I think, good for most of the companies, including for Maruti. With the new product launches, I think on that front, we are remaining relatively more strong, more convinced. I would like to see, as I said, I think how the profit margin sustains in subsequent quarters.
Okay, so that's on Maruti. Anything in the technology space, Deven, that you like? Because, we've had some good numbers come in, right, in the mid-cap IT space. There's Persistent Systems, there was Mastech, Cyient, all good numbers. And today you have KPIT Tech that comes out with earnings as well. So from that entire pocket, anything that stands out for you as a good buy now?
So generally, the observation, Sonia, is that I think in the frontline IT companies, most of the stocks have been priced to perfection levels, as a result of which I think any level of disappointment has possibly affected them more than otherwise. Though I would like to believe that I think many of the IT companies would have relatively sustained growth continued forward, largely because of the fact that the world is changing and probably I think there is a higher amount of demand for the solutions that Indian companies are offering particularly. In the mid-tier IT space companies, I think companies which are offering the solutions on the technology front and the industrial product segment, probably I think they're relatively better off because they're having that niche in this particular area where probably the sustainability of the business is seen much higher. At the same time, I think some of the specialized applications, particularly I think where the changes are coming very rapidly, and that is going to be the automobile segment, where the autonomous car, particularly electric vehicles along with, I would think there is going to be, I think, higher amount of demand for the niche players like KPIT or for that matter Tata Elxsi in this particular space, including companies like LTTS, I mean, where we see higher amount of growth coming from the industrial segment, would possibly mean that I think these companies should relatively produce better performance. So we would be selective about looking at IT companies, and particularly in the mid-tier segment, where I think the opportunity looks more reassuring than otherwise.
Okay, all right, Deven, thanks a lot for that. But, we request you to stay with us for a little bit. We'll slip into a short break. We come back, we continue our chat with Deven.